Good afternoon. Hello, everyone, and welcome to the second webinar, part of Schulich School of Business's webinar series on shaping the post-pandemic world. My name is Preet Olak, and I'm the Associate Dean of Research at Schulich. I'll be hosting the webinar and moderating the question and answer session. Now it is with great pleasure that I introduce today's speaker, Professor Amin Mawani. Amin is an Associate Professor of Taxation and the Academic Director of the Health Industry Management Program here at the Schulich School of Business. With graduate degrees in economics, law, and accounting, his recent research has been at the intersection of taxation and healthcare. In his writing and teaching, Amin reminds us that employers need to invest in employees' physical and mental health, since it is the employees who are the profit drivers in any organization. Governments also occasionally need reminding that employees need to be healthy in order to be productive taxpayers. The COVID-19 crisis offers an ideal setting to discuss how both employers and governments can safeguard employees' role as profit drivers and taxpayers. In today's webinar, Amin will talk about the various financial assistance programs available during the COVID-19 outbreak, including the Canada Emergency Wage Subsidy program that was legislated just last weekend. In his discussion, Amin will point out the CEWS can be a win-win-win program for the employee, the employer, and the government. Over to you, Amin.
Okay. Thank you, Preet. Thank you all for joining me. I'm hoping you can hear me, and if not, somehow you will let me know that you cannot. Hope you're all staying safe and healthy. The work underlying this research was done with my co-author, Salim Haji, who is the CEO of EmployeeSoft. I will now go over to my PowerPoints so I can share them with you. So hopefully you can see my PowerPoint slides. So I'm going to talk about the new Canada Emergency Wage Subsidy program that offers business reimbursing businesses for up to 75% of the wages paid to employee during this crisis. I have too many things on my screen right now, so I'm trying to need multi-focus lenses, but this webinar basically will focus on evaluation of this program in comparison with other financial assistance programs for both businesses and employees. So in some cases, maybe businesses will educate employees, and in some cases, employees will need to educate their employers. And the reason for all of this is to mitigate economic hardship and provide liquidity to middle-class Canadians, and to keep businesses engaged with employees so they can resume their operations much faster once this crisis is over. How it's done, the program will pay employees 75% of pre-crisis wages up to $847 a week. And then the employers can seek reimbursement from the federal government from this program. And the expected duration is 3 months, but it could be extended beyond that. Okay, so generally going back, maybe one thing to keep in mind as we talk about this is from Economics 101, is that if you are hired by someone for $60,000, you can rest assured that your employer is benefiting more than $60,000 from you. You're probably contributing to their profits $62,000 or $65,000 for them to be able to pay you $60,000. So the employees are the profit driver. So here's, you should keep that in mind as we discuss this whole thing. So the government's perspective, first of all, is the CEWS is not just another stimulus package. It's a disaster relief program. It won't just try to stimulate the economy, but without it, we could be our health plus economic crisis together would add up to a lot more. It is designed to provide liquidity to employees and reduce economic hardship. And it's an interesting program in that businesses are called upon to serve as conduits in delivering this assistance to the low and middle income earners. Why this particular group? Well, it's the low and middle income group, middle income earners who are most likely to spend most of their earnings on the necessities of life. So they don't have enough savings. They're less able to work remotely. I'll point out some recent research from the University of Chicago a bit later on. And they're likely overrepresented in those who have lost their jobs during this crisis. Just as a reminder, we don't have the 2020 number yet, of course, but the average annual wage of Canadians in 2019 was $52,600, which is very close to the ceiling of this program as to which wage earners will this program help. Okay, so continuing with the government's perspective, the CEWS will offer 75% of the first $58,700 annually, or up to $847 a week. So you can see that this is sort of the average wage. Employers have to pay their employees first and then claim the subsidy. So there is an element of risk to employers. But it ensures that the subsidy is only used for wages and not for executive compensation or share buybacks. This is a concern shared by many, including the US Congress in the way they were designing their relief program design. And by retaining the employees, businesses will be able to return to operations much sooner and replenish business profits, which in turn will also replenish government tax coffers. So business and government can therefore be willing partners. Here's the business perspective. This wage subsidy program will allow businesses to jump back to operations sooner. Businesses will be able to retain trained employees who may be much more loyal and motivated after getting 75% of wages when most needed. We'll compare this program with others to show that this is quite generous. The cost to the employer for offering the subsidy is some administrative cost. You have to do all the paperwork and so on, but there's almost zero out-of-pocket cost, assuming you're not topping up the wages. So the subsidy offers you up to a dollar amount maximum, as well as the 75% of your pre-crisis wages. So if you're only offering up to that maximum, there should not be any out-of-pocket cost. In return, businesses also save on costs to rehire and retain replacement employees. This can easily amount to $1,200 to $2,000 for an employee at the average wage level. Obviously, it's much higher at senior levels, but just to hire an average wage employee can easily cost up to $2,000. And having to avoid rehiring and training during a PC reboot is very beneficial. This program also does not preclude employees from doing some work remotely during the lockdown. For example, they could work on a post-pandemic marketing plan. So that's certainly feasible. There's another program in conjunction with the several programs, but one more to keep in mind is the Canada Emergency Business Account, or CEBA. This is only for small businesses, and it provides interest-free loans of up to $40,000 via financial institution. So you go to your neighborhood bank and apply, and they'll give you an interest-free loan of up to $40,000. 25% of this loan, or up to $10,000, is forgiven if the entire loan is repaid by December 31st, 2022. So this can be used to finance some of the wages while waiting for the reimbursement under the CEWS program. Businesses may also be eligible for other programs. So there are several in a row, but this is sort of the big ticket item, which I'm illustrating further. So once again, the wage subsidy is up to 75% of pre-crisis wage to a maximum of $847 per week. The subsidy received is taxable to the employer organization, but the wages paid are deductible to the employee. Owner managers are also eligible if they were on payroll prior to March 15th, but you cannot add them on after March 15th. New hires are eligible, so if you find a new business opportunity you want to embark upon during this crisis, You could use that to hire new employees and get them to work remotely. Pay increases are not eligible, but then businesses at this time would not be expected to come up with pay increases. Only employment income is eligible, not dividend income. So dividend income is investment income, and governments around the world have refrained from subsidizing any investment losses during COVID-19, mostly because it's unaffordable. They have been extremely high, and it's regressive. Investment income is mostly earned by high-income earners. Here's a caveat. I'm not talking much about topping up the wages beyond the 75% because businesses might be having issues with their revenues as well. The topping up the remaining 25% is not a requirement for this subsidy. And very important caveat is that if your organization has an employment contract with your employees or a union agreement, you should seek legal advice. In some cases, any situation where you're paying your employees less than 100% could be in violation of form-specific contracts. So you should seek employment advice, legal advice. Now going over the revenue threshold. This is the main area where businesses will have to ensure that they are meeting this requirement. Otherwise, they could be running a significant risk for getting this subsidy. So the program requires businesses. So first of all, I mentioned businesses because it includes every type of business, corporations, proprietorships, partnerships. So it requires businesses to demonstrate revenue decline, not income, but revenue decline of at least 15% between March of this year and March of last year, or between March of this year and the average of January and February of this year. For April and May, this requirement of revenue decline is then 30% compared to the same months in 2019 or compared to the average of January and February of this year. So being able to use January and February of this year as baseline ensures that new startups are also eligible for this subsidy. A senior official has to attest for the decline in revenues, and there is fraud for misreporting. You have to repay your subsidy plus 25% additional amount as penalty. So this is the crux of this. If you don't get this right, your organization could be incurring some risk. Here's the program's attempt to offer some certainty for businesses. For greater certainty, employers automatically qualify in the immediately following period if they qualify for the earlier period. This makes the subsequent period's eligibility criteria effectively the same as the immediately prior period's eligibility criteria. For example, a business experiencing a 20% decline in revenues would qualify for the subsidy in March. However, once it qualifies for March, it would automatically qualify for April, even if April's revenue reduction is less than 30%. So this is allowing businesses to get a little more certainty. Why insist on this revenue declines? Well, the program's requirement for this 15 to 30% revenue decline ensures that businesses with minor fluctuations end up self-insuring. It is similar to a deductible in an insurance contract. And it's essential to prevent the subsidy from flowing through to online businesses or grocery stores that might be enjoying a success right now economically. And the monthly revenue reporting will likely not be onerous since banks usually require something similar in terms of monthly reporting of revenues and income. One good feature or positive feature for businesses is that you don't need to demonstrate that COVID-19 was the cause of your decline in revenue. So this helps. You might be experiencing slowdown for other reasons such as decline in oil prices or even seasonality. If you meet the criteria of showing a 30% or a 15% decline from the first 2 months of this year or from the same months last year, you're eligible for this subsidy. So how are revenues measured? They can be measured both on a cash basis or on an accrual basis, as long as it's done consistently for all periods in which the subsidy is claimed, as well as for the baseline period. So, most businesses will try and measure their revenues using cash for January, February, and then the subsidy periods, and then see if they meet the test. Then they will try it under accrual method just to see if they meet the test in there. And whichever, if they satisfy under both, then they have quite a foolproof case. But whichever ends up meeting the case, they'll report their revenues that way. But then they have to consistently use that method of measurement going forward. So a landlord, for example, who is not able to collect all her rents on time, may be able to show a greater decline in cash revenues, even if the accrued revenues have been earned. So, if you don't collect the cash, you don't have the cash revenues, even though the accrual revenue has been earned. So businesses who can afford to wait will wait to see how the business unfolds, how the revenue declines unfold before applying for this. You can apply retroactively, and a good feature of this is if you apply retroactively and pay your employees the wage subsidy, any other benefit they might have received can be repaid back to the appropriate government agency. A unique part of this subsidy program is that the list of applicants who are successful in getting this subsidy will be publicly disclosed. Business associations are currently lobbying against it, but it can be an opportunity, and here's how I see it. One is employers can signal their corporate social responsibility credentials. They can publicly say, look, we take care of our employees during a crisis. Employees can also see whether their employers are on that list, and perhaps even see if their fellow competitors of their employer is on the list. So not being on the list could signal inaction on part of the employer, and employers have until October 2020 to apply retroactively. If others in the industry are not accessing this subsidy, then perhaps maybe everyone in that industry may not access the subsidy. It all depends on the line of business, I suppose. But again, not being on this list, there's one other aspect in that it could signal that the employer did not experience a 15 to 30% decline in revenues. Perhaps this is a positive signal. So it's a mixed bag. Researchers will be looking forward to seeing this list of companies that have received this kind of subsidy. Now, in other kind of subsidies that governments provide, such as the one for scientific research and experimental development, tax credits, and so on, there's no public list of recipients. If it's a material amount, then public corporations need to disclose it on their financial statements. But if it's not material, we never know who got it. But in this case, this is a $73 billion program on part of the federal government. They want to make sure, I suppose, and we'll hear during the election time as well, as to how many jobs this program subsidized. Okay, so now there's another program that is, there are two other programs that are in place to help employees during this disruption. One is the Standard Employment Insurance Program, and the other one is the Canada Emergency Response Benefit Program, and this is up to the employee to decide whether to apply or not. CERB offers $500 per week for 12 weeks, and this could be extended if the lockdown continues. EI offers 55% of pre-crisis wages up to a maximum of $573 per week. So assuming you meet the criteria for both programs, then CERB offers higher after-tax cash flows compared to EI for Canadians earning up to $47,000. Both amounts are taxable, and both amounts are not subject to EI and CPP. Right now, for many earning up to $47,000, the CERB is more generous, and EI applicants are automatically redirected to CERB when appropriate. Now we again talk about the wage subsidy program and compare it to the other programs such as EI and CERB. So choice between EI and CERB on the one hand and CEWS on the other hand is up to the employer. The wage subsidy program offers higher after-tax cash flows than EI or CERB for those earning wages greater than $37,000. So for most employees, CEWS is the winning program. It allows employers to ask employees to work remotely. Some employees may appreciate the opportunity to remain engaged, while others may find it takes away time from homeschooling their children or other family commitments. But in general, the amount of after-tax cash flows is higher than any other program for most wage earners. So here's sort of the income line. So up to incomes of $37,000, CERB is the best program, followed by the wage subsidy program, and then EI, employment insurance, is the least optimal program. In the middle range, the wage subsidy, after $37,000, the employment wage subsidy program is the first best, followed by CERB, and then followed by EI. And then for those earning more than $47,000 in pre-crisis wages, the wage subsidy offers the most generous benefit, followed by EI, and then followed by CERB. So I'm going to offer just some comparisons for 3 levels of income, just as an illustration. So let's say you have a program for an employee earning $30,000 a year. $30,000 is about at the minimum wage level. So under EI, if the pre-crisis gross weekly income would be $576 in all 3 cases. So that's your baseline wage. The EI benefit would be $317, or roughly 55%, assuming you meet all the criteria. The CERB weekly benefit is $500, and the wage subsidy would be $432, which is the 75% of the pre-crisis wages. Now, there are employee deductions from it. All of them are subject to income tax, including the CERB. Now, the way the CERB is operating right now is you get the gross amount in the mail right now, deposited directly to your account. However, at year end, when you file your 2020 tax returns, you'll have to declare this as income, and eventually you'll have to pay $51 per week in taxes on your $500 of CERB benefit. So your net after-tax cash flow would be $448. So you can see for an employee earning $30,000, the best program is CERB at $448, followed by CEWS at $368, and EI is the least desirable program. Now let's look at an employee earning $40,000. Here, going through the same mechanics, we find that the wage subsidy offers the highest after-tax cash flow to the employee, which is $473. The second best is CERB, and EI continues to remain the third best. Now let's look at an employee earning $60,000 a year. Once again, all of these are in I'll show you a brief glimpse at the spreadsheet that I have that looks at all these numbers. At $60,000, once again, the wage subsidy offers the highest after-tax cash flows. Now the second best program is the EI program at $506 a week. And CERB is the least best at $448. So here they're all summarized together in a graph. The CEWS versus EI versus CERB. You can notice at the lower income wage, now I've changed the wage levels a bit just to give you further illustrations. So at the wage level of $30,000, the green, which is CERB, Canada Emergency Response Benefit Program, is the most lucrative. It's the first best. At an income level of $37,000, the wage subsidy and the CERB are at break even. at $448. At income levels of $47,000, the wage subsidy program is much higher, followed by the other two break-even there, the CEWS and the EI. And at income levels of $55,000, the wage subsidy offers much higher, and EI is second best, and CERB is the third best. So you can see that programs, the ranking of programs are different according to the pre-crisis wage levels of employees. CEWS is the first best at higher levels. CERB is the first best at the very low level. The second best ranking also changes. So you really have to look at which one offers the most benefit to your employees. Now here, something to keep in mind. Remember my opening line that employees are the profit drivers of our businesses. We need to look into this to make sure that we are offering them the best possible support we can. As I will point out in a few minutes, all of this involves equal cost to the employer, to the business. There are administrative costs to applying for it, and there's some risk in that if you don't measure your revenue decline well, you could not get the wage subsidy. But in many cases, it'll be a no-brainer. If your business is closed down, obviously revenue declines will be easy to justify. But if they're not, if you're just suffering from marginal revenue declines, then you have to be extra careful to make sure that you are on the right side of the law before you apply for the wage subsidy. So now here's the employer's cost if the employees are working remotely. So they're not on paid leave. So you ask them to do something at home while they're still on your 75% payroll, then the employer has to pay some element of the cost, which is just the CPP and EI premiums. So here's the math for it. So someone earning $30,000, the after-tax cost to the employer for retaining an employee on the wage subsidy is about $24 per week. $33 for employee earning $40,000, and $50 for employee earning $60,000 a year. So it's not significant. The cost to the employer are marginal if you want to keep your subsidized employees doing some work while they're in a remote location. So this will allow you to be ready to launch. Employees will be able to do things much faster. For example, both Air Canada and WestJet announced before the legislation was even fully in place, they announced that they would use this program to pay their employees. And for them, it must be very important because they want to start flying the day that the demand comes back. Right now, they're closed not because of any government regulation, but because customers don't want to fly. So perhaps employees can be at home. Some of them could work on their contingent flight scheduling and so on. But as soon as it's over, they can be ready to jump. The supply chain issue is quite complicated, and tomorrow you'll learn more about supply chains in general. But you need to have your supply chains ready for business for you to be ready for business. And businesses may find out the hard way that it is much easier to shut down your operations at the start of a lockdown, but much harder to switch it back on. And those who can do this, those who can engage their employees and keep them on payroll, they might find they could advertise that feature and say, look, we are good employers, but we're also ready to operate business as soon as your customers are ready to come back to us. And all of this makes the cost of inaction much greater than the cost of action. And this, tying back to the last webinar we had, ties in with corporate social responsibility. That managing employees by viewing them as internal customers can increase their job satisfaction, loyalty, and productivity. And it aligns their interests to those of the shareholders. I've written a bit about it in the Globe and Mail on how businesses should plan for coronavirus disruption. And some of these features, some of these issues are mentioned there. How many jobs can be done at home? I only have two more slides. One paper that came out last week out of Chicago's Booth School of Business says about 37% of jobs in the US can plausibly be performed entirely at home. And countries with lower income levels have a lower share of jobs that can be done from home. So again, maybe we're all thinking, for those of us who have kids, what shall we advise our children? What kind of career should we advise our children to pursue? Not that they will listen to us anyway. Almost every business will need to have some health angle to it. Employees' awareness, employees' role in creating the profits will be much more emphasized going forward. And into this, I just have this last slide that talks about our health industry management program, which is a specialization within the Schulich MBA. It has 4 courses that we offer every year. And half of our students, it's a very small boutique program made up of about 25 students annually. Half of them come from the healthcare industry. The other half from outside want to come and use their skills towards the healthcare industry. So I'll take up questions now, and sorry if I went too long, but we have about 20 more minutes.
Thanks, Amin. While you were giving your presentation, I was going through the questions. So if you don't mind, I can pose those questions and so that you don't have to do the reading. And I can also kind of put them together. So there are a couple of questions regarding whether business can hire a co-op student for the government's new program of 100% paid subsidy.
So new employees are eligible. So it's up to 75% of wage subsidy. So if you're hiring a new employee, you don't have a baseline wage, or wage you can say he or she used to make $100, and now I'm subsidizing up to $75 for them to do nothing. So there would have to be top up if it's a new employee. But there's nothing about co-op in the legislation. An employee is an employee, whatever kind of employee they are. So they would be eligible, but you would be subsidized only up to 75%. So 25% would have to come from the business's own other funds.
Okay. So there's a question from Rebecca Hellquist. She asks that it has been mentioned that the CEWS is available for all kinds of businesses. Does this include self-employed entrepreneurs?
Correct, yes. Self-employed entrepreneurs are eligible for applying for this.
If the employee is hired back with reduced working hours, what CEW program would be based on pre-crisis or after hiring back with reduced hours?
Yes, so all of those are in that calculation. So the amount of subsidy is based on 75% of pre-crisis wages or the amount paid now, whichever is less.
The next question is from Nusrat. The question is, which sector of industries is taking the biggest hit due to this pandemic as of now? And is that sector being compensated relatively more than the other sectors?
So far in Canada, at least, there's no sort of sector-specific assistance yet. The federal government said it's looking into things, such as for the oil and gas sector and others, but so far they're all across the board assistance. So yeah, I think the sectors that have been hurt the most are the airline and the tourism and the hotel industries, but they're not getting anything beyond this. As I mentioned, Air Canada and WestJet have already mentioned that they will use this wage subsidy to retain like thousands of their employees and offer them 75% subsidy for just being there on standby.
Okay. Oshnish Sengupta asks, is there any published data available on Canadian COVID emergency funds by province and industry?
No, but it should be forthcoming soon. For example, when Bill Morneau was asked at the last sitting of Parliament, how many people had taken up CERB, he did not have an answer. So all of these things are coming up soon. I just know from listening to the nightly news about how many EI claims have been made, but we don't have an idea yet of how many have applied to CERBs. And the CEWS is not even operational yet. It is law. It is being you can apply retroactively, but the operational forms on the CRA website will be up shortly, within a week or two.
Okay. Taslima Rashid asks, Professor, you mentioned employees under contract need to seek legal advice if not paid 100% of the agreed payment by a firm. Does this mean that non-unionized and contractual employees are now under CEWS?
No, I'm not saying that. What I'm saying is some people have contracts that say, I will, I will teach a certain amount for my employer, and if I'm on contract, then they cannot use this program to say they'll offer me 75% of the wage, because the contract might supersede the subsidy program. So in that case, you need to consult a lawyer. I'm not offering any advice.
Okay. Hafiz Damani asks, I'm a dentist operating under my own PC. Income is drawn monthly from the PC at irregular amounts. Do you take the average? If so, over how many months?
Yes, so if you are also an employee, besides being an owner manager, you are also a manager and therefore withdrawing a salary. It's okay if it goes an irregular salary. You just have to take the average from January 1st to March 15th, and that would be your pre-crisis wage. And you can then apply for subsidy for you as an employee for up to 75% of that pre-crisis wage under this new program.
There's a question from Catherine Scott. If we have been having reduced work week, would the money given for employees pre-crisis be able to be used to cover, just a second, it has vanished, to cover the missing wages during this period?
It's got a bit of, I'm not sure I understand the question correctly, but so first employers have to ensure that they can demonstrate a revenue reduction, otherwise they're not eligible. And then it's not like they're just trying to sneak in, getting the subsidy to pay and get real work done. The work you cannot be paying 75% of the wage through the subsidy for 100% of the work. So that's won't fly. You can get them to do a little bit of work from their homes remotely. That will help the employer, but they're getting 75% subsidy. So in order to apply this, this is why it's a good thing that they will make this list of successful applicants public, so that employees can know that my employer did receive a subsidy on my behalf. And therefore, certainly nobody should be doing 100% of the work for 75% of the subsidized wage.
Janine Herman wants to know whether when you hire someone new, is the 25% top up a recommendation or requirement?
The language is not clear, but it would have to be a requirement, I think. The reason being, how can you say I'm hiring you, don't do any work, go stay remote, or do some work, but and I'll pay you 75% of your going wage. So let's say if I was hiring you at minimum wage, so I'm going to pay you less than minimum wage or 75% of minimum wage. So it doesn't quite make sense why employers would do that and why employees would agree. So top up in this context, if it's a new employee, sounds the most reasonable to me.
Okay. Zinia Wang wants to know whether that you mentioned that companies have to demonstrate revenue declines in order to be eligible for CEWS. How does this rule apply for startups that do not have positive revenue yet?
Yes, so unfortunately, the program doesn't quite work for them. So if they were struggling and they're still struggling to show any kind of sustained revenues, then I believe, and I'm not 100% sure, that the government is looking at different programs for those kind of companies. But basically, remember, in some ways, we're all startups in some areas or the other. If they opened up the definition, then all of us would be eligible for a subsidy like this. So sort of reasonably brand new startups are not eligible.
Justina asks, how about an employee who left the workplace due to the health concerns before the programs were approved?
Yeah, if they had a wage, if they had a pre-crisis wage, average weekly wage from January to March 15th, and if it's 1 week less, it's okay. The average is taken over the amount, number of weeks worked. So if they had pre-crisis wage, and if the employer is up, the decision to use this subsidy is the employer's decision. So if the employer decides to pay this employee 75% of their pre-crisis wage, then there would be certainly they would be eligible for it. It doesn't matter what reason they left, whether the employer asked them to stop coming to work because customers were not coming, or because health reasons of the employee, fear of health reasons, or just because there was a public health lockdown and said non-essential services should no longer operate. So any of those reasons, it doesn't really matter as long as the employer decides they want to keep the employee on their payroll and give them 75% of their pre-crisis wages.
Okay. Janine wants to know whether the wage subsidy would be considered income to the corporation.
Yes, it is income to the corporation, but then the wages you pay to your employee are an expense, so it washes out as far as tax is concerned. So you would get a subsidy of, let's say, $60,000 in a given week, and you pay out wages of $60,000.
Stephen Iskander asks, what wage period will the 75% CEWS return program be based off, assuming a company is to reduce wages by 25% for the past 2 months?
Okay, so again, I'm not clear what the question says, but the program, the CEWS right now, it's on for 3 months, March, April, and May. The exact dates are given. They're based on pre-crisis wages, let's say earned between January 1st and March 15th. So the employer can decide to pay 75%. This program might be extended if the COVID-19 lockdown is extended. So it is a disaster relief program. So yeah, I don't know if I've answered the question, but it wasn't quite clear to me.
Okay. Nikunj asks, what could be considered as non-arm's length transaction for revenue purposes?
Yeah, non-arm's length would be if you're selling stuff to your subsidiary or to your parent company or to another company that has common ownership.
There's a question of when will be able to claim 75% wage subsidy through the CRA website?
The expectations are in the next 2 weeks or so.
Okay. Jason, she asks, if the company pays me $1,000 per month with CEWS, am I still eligible for CERB?
No, you're not. It's you cannot double dip. But you could have applied for CERB first before you knew that your employer was going to subsidize your wages, in which case you would have to repay or reimburse the CRA for the lower amount.
Okay. Then there's another question from Mr. Raul and Babis. Do we have assurance that my employee will go back to 100% when lockdown is over? Is government planning sanctions to employers who do not quickly return to 100% wage post-lockdown?
I think wages are determined by marketplace, by supply and demand. In normal time, I don't think governments would interfere in the amount, as long, there are some regulation, of course, there's a minimum wage and so on. But in general, during normal times, the employers and the employees, through market supply and demand, come up with an equilibrium wage that goes for it. Now, it would be hard for employers to justify a lower wage than pre-crisis times, but it's a marketplace decision.
Well, thanks, Amin. We are almost out of time. I want to thank you again for a very engaging session. And let us all give him a virtual applause. So before we close, I would like to do say a couple of other things. One is our next seminar, which is just around the corner tomorrow afternoon at 1 o'clock, where we have Professor David Johnson talking about how COVID-19 will change supply chains. So I hope all of you will be able to join for that session. And in closing, I just want to kind of reiterate that Schulich is open and we are here to address your questions if you have about the Schulich series or inquiry about our programs or what is happening at Schulich. And these are some of the places where you could, through which you could connect us. So again, thanks everyone for joining us, and we hope to see you or participate in our upcoming webinars over the next few weeks. Thanks, and thanks again, Amin.
Thank you.